Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only and I am not a financial advisor. So for those of you who do not know, I have over 20 years experience teaching accounting, economics, business and law. So through this channel, I would like to provide you with some stock analysis and a short 5-minute trading lesson at the end, so please stay tuned. Okay, let's have a quick recap of previous day's trading. A number of stocks did fall. We're going to have a look at some of those shortly. And the first one is ticker symbol ABEPF. This fell 24%, closing at $0.46. I did increase my investment in this one as well, as this was an excellent buying opportunity. So other stocks that came down were ticker symbol DSGT. So this was also down. This was down 5%. We also have American Battery Metals. This was also down at just over 2.29%. And the other one that I'd like to talk to you about is ticker symbol ALPP, Alpine Technologies. This was down in excess of 12%. Also represents a good buying opportunity. So we're going to have a quick look at why did Alpine Technologies have such a significant fall. Okay, so what happened was Alpine Technologies decided to offer 8 million shares to institutional investors for $6 a share. This is nothing really to worry about, and this is the reason why the share price did go down on Friday. So what was the reason for this additional offering? So we're just going to have a quick look at an article here from accesswire.com, and we can see here the reason why the company offered these additional shares was to repay some debts and also fund some additional working capital needs. So the benefit here is long term, this will allow the company to grow, this will allow the company to invest, and I do expect the momentum to go back up. There could be consolidation on Monday for the share price to go a little bit more down, possibly to $6.50. So this should be seen as a buying opportunity. On a positive note, some of the medical shares that we have brought to you did have a good day. It's the first one, ticker symbol ATOS. This is a stock I just re-entered after cashing in profits earlier, and this closed 12.3% up at $3.63. So long term, I do see lots more movement up in this one as well. Also excellent stock which I'm holding for the long term, ticker symbol BNGO. This closed up in excess of 17% at $13.73. So please refer back to the video for this one. And we also have ticker symbol CRSP. This one closed up very well at $161.15, representing 1.12% growth. So these were some positive gains. Okay, another stock that I brought you earlier, ticker symbol SENS, Senseonics. This also had a good day's trading, closing at $4.16, representing a 9.47% increase. Please refer back to my other video for detailed analysis of this stock, which I'm also holding long term, as I see this having lots and lots of potential. And the previous video also brought you analysis of Orbital Energy, ticker symbol OEG. So this again consolidated at $8.47, which is just a 1.9% fall. So again, I do see movement up within the next week or two. So keep this on your radar and add this one onto your watch list as well. Please refer back to the video for more detailed analysis. I'd now like to look at ticker symbol CCIV, Churchill Capital. This one closed at $39.99, which is growth of 26.91%. So this is tremendous news for investors who got in early, and many of you would have had gains in excess of 100%. Let's have a look at what the latest developments are between Lucid Motors and Churchill Capital. So the main catalyst for the spike in the share price, we're going to check what was that and why. So this is nicely summarized in an article from WCCF Tech. Let's have a look at the headline. So Lucid Motors and Churchill Capital now much more likely to merge as a consortium of investors led by Venrock Associates look likely to sell their stake to the SPAC, and valuation remains the key. So this is certainly adding fuel to the fire. I see this as a positive sign, and it looks like the talks are kind of probably just delayed based on valuation. So let's have a look at the rest of this article. So delving deeper into this article, let's see what else we can find. So we can say here, Lucid Motors continues to be the center of attention in the luxury EV manufacturing merger talks with Churchill Capital. And what we can see here is there was an update on the Bloomberg terminal, and this was the cause of fresh waves of buying for Churchill Capital shares. That's a screenshot there from the Bloomberg. And what we can see here is Venrock Associates is negotiating a sale with Lucid for Churchill Capital, and we can see that obviously Venrock is one of the oldest investors in Lucid Motors. So strong circumstantial evidence again here. And let's just finish off by looking at the end of this article. So the final part of this article is again suggesting that a consortium of investors from Venrock Associates is negotiating a sale of Lucid to Churchill Capital. However, it's still not a done deal, and it's still in the phase of talks are ongoing. So second paragraph there, the talks are going, the negotiations are continuing. So most likely it's probably more to do with valuation. And let's refer to the last paragraph there. Basically what we are saying is Lucid Motors is looking to be publicly floated. This is one of the options. There are other options also, and we do know that this is not a done deal yet, but it's looking more and more likely. What we can also do now is have a look at some of the institutional holders of CCIV. So we can see here lots of shares that are held by big institutions, and these include HSBC, they include Periscope, and if we look at the date, Periscope invested on the 31st of December. HSBC also invested on the 31st of December. So this is a strong sign that these institutions are looking for big gains. So hopefully this is a good sign. So let's have a look at a social media angle on this. So this is a retweet from the Wolf of Fulham Road. Retweet is from the official Twitter handle Saudi Project. So this is basically translated as urgent, a project is launched shortly. So this is a little bit more fuel to the fire, no confirmation, no definite announcement of a merger, but certainly a lot more speculation indicating that the merger is going to go ahead. A lot more positive, a lot more confident that this will happen. So let's now have a look at how to play this on Tuesday, which will be the next day of trading. In terms of how to play this, as we know, it's closing around about $40. So in terms of Tuesday, there could be a spike. Very, very risky for new investors to enter, as the investment could decline by in excess of 75%. So please be careful if you are new to investing in CCIV, because as the merger is not announced, it's not official, and if it does get cancelled, your declining investment from $40 will go down to $10 per share. So please bear that in mind for those people who have entered this play from a while ago. Like myself, I've taken profits twice. I'm still in this play. I'm prepared to lose some of my money if it doesn't happen, but the signs are getting more and more positive. So fingers crossed. Let's hope for some good news. Now time for lesson of the day. So this is just a continuation from the previous lesson. So this is more tips for success for people who are new to trading or thinking of trading. So the first advice is always in your portfolio include a majority of shares which are high quality stocks. So depending on the amount invested, also try not to have too many stocks. So for example, if you're starting with £100, I don't think it's a good idea to have £100 and then divide that up into 20 stocks. So if you're looking at investing, so certainly it's good to diversify, but as your portfolio grows, consider more and more companies to invest in. Second thing is don't get emotionally involved with your stocks. create a set of buying and selling rules, and don't let your emotions change your mind. So once that happens, your losses can accumulate. And then finally, obviously, as we know, penny stocks are always riskier, but they can give you the highest potential return. And that's why where due diligence is very, very important. And just a final bit of advice here, think about cashing in profits once you go in excess of 20%, and also think about selling and taking a loss once you losses have gone down to 10% or above. Thank you very much for watching. Please join me again and stay tuned.